Let's get into this market picture now and see how things are faring, particularly on the local front, which seems to have gone into some negative territory. But look at where it all comes from. The negative twist out in Asia, more than 1% lost out for the Hang Seng there. Unfortunately, out in Hong Kong, the Shanghai Composite and Nikkei going down a similar mark as well. All red, unfortunately. The European stocks as well, taking in that sense of negativity and dipping overall as well. The DAX in Germany going down 1.33%. The CAC 40 in France is 1.2%. The FTSE 100 out in London also getting some negativity, just 1/3% weaker. As I said then, unfortunately, weakness for the local index. Yesterday we saw the JSE All Share go up over 1%. Today it's fallen nearly 2%, 1.85% should I say, down for the JSE All Share at 55,157 points on that front. The weaknesses do come from those banking counters, which have fallen nearly 3%. Industrials also losing more than 2% today. Resources down 1.5% too overall. So that negativity clearly widespread across that market picture. Onto the commodities board then, weakness as well for the Brent crude price, 0.8% down. In fact, now selling at $42.38 a barrel on that front. Gold has been the market saving grace, if you want to call it that, even going up to levels last seen in September 2011, but it's not to be today, unfortunately. That goes down nearly 0.5%, $1,794 a fine ounce there. It's 8.23 for platinum as it goes down also 0.5% this afternoon. Slight strength for the local currencies at 16.76 against the US dollar. It's pretty much the same market was at yesterday around this time as well, so not much in terms of movement in the last 24 hours there. 19.07 though for a euro. The British pound is flat at 21 rand there too. All right, let's have a chat about this market picture a little bit. Chantel Marks from FNB joins us as well. Then Chantel, thank you so much for the time. One day we're up, the next day we're down. What exactly is driving this market? Is it COVID-19 or is it just a sense of when can I get my profits?
So I think it's a combination of a couple of things, including profit taking, COVID-19, uncertainty around what central bank supports and fiscal support will do for the economy and for these companies. And then there's always geopolitical risk. What is happening between the US and China? And I think that is really what is playing out right now. The fact that a renewed trade war or a political to and froing could really throw markets out of kilter, both in the US and over there in Asia, which then spills over to the rest of the world.
Yeah, but it seems though you have the likes of the Nasdaq, right, going into record territory on a continued basis. And even though that's fallen off ever so slightly, it's still sitting much better off than it was back in March. Has the market written off COVID-19? Has it said, oh, well, we've passed this from a market point of view and we're now headed off into our own sort of territory and liquidity still remains a thing that the market really has?
So if you look at companies outside of the tech sector, the movements have been a lot less pronounced and they are not fully back where they were at the beginning of the year, which means they're still pricing in some sort of weakness in earnings. The tech stocks are rallying, I think, in part because the expectation is there that they'll benefit from COVID-19. Previous trends have just accelerated, which will be good for these companies. And then I also think there's probably an element of euphoria involved as well. So it is an exceptionally crowded trade at the moment, which means a lot of people are investing in tech shares. And that is why those shares have kept on going up.
Yeah. We also saw those mining numbers come out. Of course, of late, we saw the gold itself, the metal itself actually go up to $1,808 a fine ounce or so, somewhere around there, which pushed gold shares a whole lot higher. But mining production isn't looking so pretty. So I guess less production means, well, the price goes a little bit higher because demand is still out there.
Yeah, this was actually quite interesting. I think when you delve into those numbers, you can see that there's still a sharp fall year on year, because this, of course, relates to May, when many of these mining companies were not yet allowed to ramp up to full production. But if you look at it on a month-on-month basis, so relative to April, where no one was allowed to do anything under level 5, mining production actually increased by 44%. And then if you look at the sales numbers, which would include the impact of the price, gold sales actually increased quite a bit out of South Africa. So the miners are still benefiting from these high gold prices, but I do take your point. I think that there definitely is an element of scarcity involved, but I think what's really driving the gold price right now is probably fear and uncertainty more than anything else.
Would you call this negativity perhaps the calm before the storm? Of course, we are expecting earnings data out of the United States. A lot of the banks are expected to put out some earnings, the likes of JP Morgan, Citibank, Wells Fargo as well. Would you say that this is perhaps in anticipation of what's to come?
I think it's going to be an exceptionally interesting afternoon because once those US banks report, we'll get a better idea of what the risks are and what earnings might look like in the underlying economy. What are bankers actually seeing to result in them increasing their provisions for bad debts to the extent that they'll probably do? Because that's going to be the swing factor, right? And I think that that's going to be very, very exciting, in a good or bad way. Either markets are going to rally or going to be a little bit stronger if those bank earnings surprise to the upside, even if they're weak, or if they surprise to the downside and are worse than expected. It could set the tone for the next couple of months in terms of market movements.
Yeah, it gets very interesting from here, of course, then. You also have Tesla's earnings coming out on July the 22nd. And if they get a fourth quarter of positive earnings, they then ship themselves into the S&P 500. How meteoric has that rise been for Tesla's shares?
Yes, it's been absolutely incredible. I think it's risen far beyond even the tech sector generally. And it's been driven by a couple of things. I think that profitability has been exceeding expectations over the last few quarters. There's also been a lot of positivity around anything that's accelerating in existing trends. So anything that is going to benefit from something like that, from people wanting to make the world a better place, the whole climate change kind of story would have also benefited Tesla. And then there's some sort of a cult following as well. I don't think that we can dismiss that. I think Elon Musk has a bit of a cult following, and a lot of people are investing in the stock because they actually believe in him as the visionary. With Tesla, I can see a fundamental case for the company, but I do think that the stock has run a little bit ahead of itself.
Do you have a bit of a cult following, or does he have a bit of a cult following here in South Africa, you think, particularly with that Tesla share? Do you feel investors are looking into that offshore market and really aiming for that Tesla share price as well?
Yes, absolutely. I think you just have to be on Fin Twitter to see that there are some very serious investors who really believe in the future of this company and in Elon Musk's vision for a better world. And apart from that, I think that you also have some cult followers outside of financial Twitter, maybe in the dark crevices of the app, that'll also surprise you with just how much they believe in this person.
Chantel, appreciate the time. Thank you so much for it. We'll chat to you very soon as well. Chantel Marks there from FNB Wealth and Investment, helping us unpack that market picture. We'll be back with more news, particularly around SAA. That story gets very interesting now. A new CEO, perhaps on an interim basis. Let's chat more about it right after this. Now, the Department of Public Enterprises has named Philip Saunders as interim CEO of the new South African Airways. The department's acting Director General was speaking during a meeting with creditors, stakeholders, and trade unions. Now, that meeting is currently adjourned to allow for voting to take place. SAA's voting interests are voting on whether to accept or reject its revised business rescue plan. The national carrier will need to secure 75% votes from the voting interest to stave off the liquidation. So far, 88% of SAA's creditors, stakeholders and union representatives have voted in favor of the amendments. And should it happen that the creditors do not vote in support of the business rescue plan, SAA would face liquidation. At the same time, though, Public Enterprises says Cabinet supports efforts to mobilize funding, particularly from various sources. We do have my colleague Amina Akram on that story for us, and continuously getting word then that the plan has actually been approved. It seems 80% of proxy in favor of the business rescue plan for SAA. So the plan has indeed gone to be approved. The business rescue plan for SAA finally agreed to as well then. So certainly interesting there. SAA business rescue creditor meeting. Government in full support of the plan, and they will send a letter to the business rescue practitioners for their funding commitment for the business rescue of SAA. So some word there indeed, the plan being approved there. My colleague Amina Akram following that story for us and giving us that update not so long ago. All right, let's move on to some other economic news now. The mining sector continues to take a beating due to the ongoing COVID-19 pandemic and its impact on the economy. The latest figures from Stats SA show that mining production decreased by nearly 30%, 29.8 to be exact, as compared to May 2020. But seasonally adjusted production saw an increase of 44% in May 2020 compared to April this year. Mining sales decreased, though, by 13.4% in May. Although the latest number is lower than the decrease seen in April, it still shows that lockdown regulations have had an extensive negative impact on the economic activity. The largest contributors were iron ore, platinum group metals, manganese, coal and other metallic minerals. Seasonally adjusted mining production increased by 44%. This followed month-on-month changes of negative 36.8% in April and minus 19.3% in March. In the 3 months ended May 2020, the seasonally adjusted value of mineral sales at current prices was 18.2% lower compared with the previous 3 months.